Hi, all. This is Dr. J streaming live from Long Island, New York, where the weather's been rain, followed by storms, followed by rain, followed by more rain, followed by drizzle, followed by rain. I think the Mets are having a tough time getting this one in tonight. Milwaukee is into Citi Field. The slugging Christian Yelich, who leads the National League in home runs with 13. But I don't know if they're going to get the game in. Last I looked, it was delayed. So after my vlog, I will take another look. The Yankees don't play till later. I'll tune them in from the West Coast when I went out to play Giants. No, not the New York Giants, not the football Giants, the baseball Giants. The San Francisco Giants. There once was a time when the New York Giants could have been baseball. But that was a long time ago. In any event, Dr. J did very little trading today. Did I do any trading today? No. I went tradeless today, I think. That's odd. I almost make a trade a day, at least. Anyway, I'm going to talk about where I see the markets headed. I'm going to look at a comparison between the Dow, the DIA, the SPY, the IWM, and the what else is there? The Qs. Did I say that? Qs, diamonds, spiders, and the IWM. Okay, I said it. Now I'm going to ask you for comments as to how to invest in these 4 ETFs if you were allocating $100,000. And do you think you could outperform a 6-month Treasury bill, which is now paying 2.48%? So let's say down the road 1 year from now, will you do better with your model portfolio of IWM, DIA, SPY, and QQQ versus, let's say, 2 6-month Treasury bills renewed, maybe getting 2.48%, something like that. Okay, as always, do your own due diligence. My opinions are strictly my own, do not constitute investment advice. Follow at your own risk, check with an investment advisor, do all of those good things. Don't forget to share the link. Tell your friends about me. Subscribe to the channel if you haven't already. Give me a thumbs up. Let's get to the video charts. I'm also going to look at a request stock, CBL, which is selling at like an even buck. And it's had a long slide down with earnings coming, I think, on Tuesday, the end of April. And also, we're going to be looking at AMD on a daily basis, so we'll continue looking. AMD had a decent day today. We're going to look at CVM, which gave back a few pennies. We'll look at those and maybe one other. All right, let's take a look and see what we got. By the way, tomorrow I plan on doing a big biotech report. Please submit to me via comment or via Twitter or via StockTwits, whatever stocks you want me to chart in the biotech area. I will gladly do it and include it. CVM. Dr. J has been high on CVM, has been adding to the position. I missed an ad. I tried to add the other day, but I ran into SafePass issues. So I didn't get a chance to add today either, as it came back down to the point where I would be adding 642, around there. The low today was 640. 2 days ago. Today, the low of the day was 646. 650, I believe, would have been a point that I would have added on some more shares. I like the fact, even for a swing trade, I like the fact that support is at 640, and I think fairly good support, 640 to maybe 639, 640. So for a swing trade, if I would have bought at 650, I might have set a very tight stop at about, let's say, the close here, the open here, which was, what was it? The open here was 636. Figured 635 would have been the stop, 15 pennies, looking for 750. In other words, basically gambling for just a few pennies, looking for the big kill. This stock is certainly capable any given day of moving up 50 cents, 60 cents, 80 cents, a dollar. So, or I could jump $8 if the data readout comes overnight. I don't know that that's going to happen, but just saying, it could also collapse if the data readout is poor. I don't think there'll be much advance notice on the data readout. It'll just happen and catch everyone by surprise, I think. Okay, let me know if you think otherwise, that there will be advance notice that the data readout will occur on such and such date or by such and such date. Perhaps that will happen, I don't know. Probably makes more sense. Okay, so I'm still very much very bullish on CVM, very much in the camp that it will take out 750 before data and probably run maybe even to double digits before the data readout. So the longer it takes for the data readout, the more likely for this scenario to play out, where it breaks 750. Okay, that's CVM. QQQ. This is my theoretical portfolio allocation. Maybe more than theoretical. I might do something of this nature. I have similar ETFs, not exactly these. So if I wanted to go into these, what would you suggest? Let's see, the Qs. Let's look at comparing the Qs with, by the way, we're at all-time highs on the Qs. Today, it did not make an all-time high, but yesterday it did. The high being what? 190, 122. Okay, let's just compare it with, I can only do this one at a time. So we have the Qs. Let's add in I don't know, we'll add in the diamonds, because diamonds are a girl's best friend. Carol Channing, right? Diamonds are a girl's best friend. All right, I'll also add in, for comparison, how about IWM? And then we'll do the spiders, so SPY. And then comparison with the spiders, SPY. 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 Okay, so let's look at year-to-date first. Year-to-date, the Qs are up 23.59%. The worst performer is the diamonds, the Dow, up 13.78%. Coming in second place is the IWM at 18.2%. The spiders in red at 17.4%. That would be year-to-date performance. So basically the spiders and the IWM are very close, with the NASDAQ 100 out in front and the Dow the trailer. I kind of think that my own feeling is that the IWM, the purple graph here, will wind up outperforming the Qs even, or at least catching up, I think. Let's look at 1 year as opposed to year-to-date. Well, that changes things, huh? Well, not really. The Qs are still way out in front, but not by as much, because it was obviously the NASDAQ 100 was at a higher level in April of last year, the end of April, than it was on January 1. So up 17.69% in 1 year. The purple, the IWM, only up 2%, and the diamonds and the spiders in a dead heat, so to speak. Very, very close, up about 10, 11%. Let's just, for the fun of it, go back 2 years, see what changes. Not much. The Qs way out in front, 38.61%. The diamonds, that's something different. In second place, up 26%. Third place, the spiders, 22%. And last place, IWM, the RUT 2000, up 14%. Okay, let's just, for the heck of it, go back 5 years. And now we have, again, the Qs up 120, nearly 120%. The blue line is a Dow. Diamonds are in second place, up only 61%. The NASDAQ did twice as well as the Dow. And the spiders as well, only up 56%. And the IWM trailing the field at 40%. Let's go back 20 years to 1999, I guess it is. Let's check that. Yeah, 1 year ago, exactly 20 years. So if we go back 20 years, the leader is still, what is the leader? The leader is the IWM, the Russell 2000, which went from last place goes to first place, up 437%. The green, let's check. The green is a Dow, that was up 280%. The royal blue, the diamonds, and that was up 169%. Wait a second. This is the IWM leading. The Dow is in third place. The spiders in last. So the Qs are in second place. I don't know the colors here. Green, and I don't see green anywhere. Oh, green must be some other line. So the color we're looking for is this color. I'm a little bit confused with the colors. I'm slightly colorblind, believe it or not. This is purple. This is purple, so that's first place. So this must be the Qs up 280%. Maybe it's a 50-day that's up 246%, I guess. Okay, so that's where we stand. Looking at various time periods. It's sort of fun to do that. We didn't look at 6 months just for the hell of it. What was in first place in 20 years is now in last place over a period of 6 months, which is a little bit longer than the year to date. The Q is still in front. It's followed by the spiders, followed by the Dow, and very close to behind the Dow is the IWM. Okay, so I'm not going to tell you what I think, other than I personally think IWM will outfinish the other indices over the course of, let's say, through the end of the year. Considering the fact that year to date, IWM is in second place, 5 percentage points behind the Qs. Going with a little bit of a long shot. It's easy to say, stay with the Qs. It's been outperforming. It'll continue to outperform. And that may very well be the case. Let me know what you think. How you would allocate. Would you allocate 25,000 in all four to all four? Or would you do different amounts? 100% Qs, ignore the other three, or some other arrangement, 50% Qs, 20% IWM, 20% Dow, and 10% spiders, or whatever you think. No, it has to add to 100. So, and give me somewhat of a rationale why. I think this is an interesting exercise to look at. Every once in a while, I like to do that. Find it educational. All right, let's get rid of that chart. Move on to the AMD. AMD had a topsy-turvy day, and it fell considerably. It had been up considerably, wound up closing up a little. So its high of the day, let's see, its high of the day was 2790. Oh, it closed right near the high. Is that right? I guess so. 2790, the close 2788. That represents 2 penny difference. The low right at support at 2705. I like the fact that it hit support and bounced off of it with a long lowish shadow, very bullish 1-day chart, 1-day candle, and it closed green. I think we should get continuation on Monday to the upside, eventually coming up to my target of about $30. I got to get rid of these Qs and so on. It's really disruptive. Spiders gone. IWM gone. Diamonds gone. AMD stays. Well, it wasn't that disruptive, but it threw off my numbers. So when it goes up here, that would be about $30, right? Something like that. So if it hits like Tuesday or Wednesday, the lower end of the previous channel, then it would be right at my target of $30. This is Dr. J looking for $30, a greedy Dr. J but a cautious one. So I'm out probably at the high of this candle, 26.80. I think that's what I said the other day. And I probably will stick to that. Okay, so I have a little bit of breathing room, but not much. Well, more than a little bit because it's up to 27.88. The other day when I said that yesterday, it had closed at 27.66. Yeah, well, still enough breathing room. I have some breathing room, but it looked bad in after hours yesterday. After hours today, it's flat, more normal after hours session. Okay, and the reason for the weakness, of course, was Intel warning. Amazon.com said 1 day delivery for you Prime holders, 1 day, and that really put a hurt on Target and Walmart. And it kind of helped Amazon all the way up to 1950. Take a look at the chart. Of course, Dr. J sold this at about 200 points lower. So I do make mistakes. I should have held my Amazon. Nobody's perfect, Dr. J. Okay, so this is some nice little candle today, even though we came back down to the trend line, we bounced up off of it, and we're very close to taking out the all-time high at 2050, which could happen, or should happen, sometime next week, as Amazon.com is a market leader, as Apple is a market leader. So as Amazon goes, so go to Qs, so go to S&P 500, so goes the market. Amazon coupled with Apple are the two key stocks, the two bellwether stocks in my mind. So very bullish Amazon. I still may buy it on a pullback. If it pulls back again to the low of 1898 or anywhere near that, I'll probably buy it looking for a couple of 100 points, make up for my stupidity a couple of months ago. Okay, not stupidity. I had a profit, a nice profit. I forget how many, about 300, 400 point profit, 300. It was significant profit, so I can't beat down on myself too much. When you ring the cash register, that's what it's claimed to say. It's always okay, something like that. This was a request stock, CBL and Associates Properties. I'm not sure I understand this real estate play. The chart doesn't look good, but who knows? I mean, the earnings are coming up Tuesday, I believe, and Louise wants to know if a 99-cent buy looks okay. Well, Louise, right now it looks okay. It closed at $1.01. You're up 2%. I don't know. My feeling is as long as it doesn't go much below that 99 pennies, probably be okay. In fact, if you look at this, the last high came on April 12th at $1.51. So even if you get a 50% retrace only on some good earnings news, even 50% will get you back to $1.25, which is 25% on your money. I'll take that. So I guess you're hoping for the best on earnings. If you have some idea about earnings being good, well, that's something I don't know and I can't really comment on. But if earnings are good, and if this stock starts retracing some of its losses, it looks to me like a halfway mark easy, maybe more than that, maybe like a fib retracement of 61.8% or whatever, something like that would be in order. So you stand to make some money if it starts retracing this last wave. Even if it retraces 38.2%, that's still pretty damn good. You make money. $38, you're making money. 38%. So whatever it retraces, that's how much you're making in percent terms. So I can't knock this. I mean, it's not a big shot. I wouldn't be buying it, but I certainly see the potential after this long sell-off. So while it doesn't look like a chartist dream, it could be another kind of dream. And I wish you luck on it. Keep in touch. Let me know how you do on it. I guess I'll keep an eye on this one myself. All right, thanks for alerting my viewers to this one. As always, do your own due diligence. This looks like a risky play, but potentially one that could be rewarding, at least from the potential of a partial pullback, partial reversal. On a full wave reversal, you're making 51%. And that's unbelievably good. And look, the last wave was traced out in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Even if it takes 20 days to get back to $1.51, that's a tremendous return for 20 days. Okay, so again, I wish you luck on this, and anybody else who happens to be listening that owns CBL, I wish you all the best of luck on this one. I really mean that. I want everybody to make money. Makes me feel good when people make money. Speaking of which, those who are still holding Tandem diabetics, I'm very happy for you. It went way up today. I don't know if it was earnings or what. I haven't been following it since I sold it off. I sold it off because it went past my stop, and you know, you have to be principled, and at least I have to try to be principled. So I sold it off, and at this point, sorry I did, but I'm glad some of you had more smarts than me and are still holding Tandem diabetics. I hope it does go to $100 a share. For all of you that are still long Tandem diabetics. This has been Dr. J, streaming live from Long Island, New York. Just wanting to say, wishing you shalom, sayonara, au revoir, arrivederci, ciao, hasta mañana. Don't forget to subscribe. Don't forget to give me a thumbs up.